Hey, real estaters, you can stream every episode of The Industrialist on Apple Podcasts, Spotify, and YouTube. Prime members can enjoy ad-free listening on Amazon Music. All right, real estaters, week 29. Hello, Wilbur.
Hello, Jeremy.
We're missing my name.
Yeah.
He's doing deep real estate things like databasing.
Yes.
He's in a database migration. He just couldn't make it today. So
we will miss you, but I'm not missing your headaches.
Yeah, no doubt. Portfolio sale. Last call, guys. It's last call if you want to get in on this. Offers are due this week, right, Will?
Yeah, they're due Tuesday.
Yeah.
But I know travel schedules are fluid.
Yeah.
So we will judge you.
We will judge.
We will. It's subjective judging, but It's not objective judging.
So I'm not going to run through all that. I think everybody knows about it by now. And if you don't, you're probably too late anyways.
Yeah. Have fun. God bless.
We do have a potential new property we're closing today that might be I'm not going to say anything.
Yeah, just hold that card.
Okay.
Let's give it 2 weeks.
Okay. Yep. Good call. Keeping that close to the vest, bro.
Yeah.
We'll circle back to that after we've huddled up, we'll circle back to that. But right now we'll keep it close to the vest.
Yes.
Ooh.
After we've bifurcated the issues.
Yes. This week, initial jobless claims forecast is 235, pre-use is 227.
Ooh,
U.S. trade deficit. This is coming up, but they didn't have any stats. But I think that's all we got this week. That was last week. So I don't know what's still hanging in there. Stock market. The Dow closed out at 44,283, losing 544 points. S&P 6251, losing 27 points. NASDAQ closed out at 20,580, losing 20 points. West Texas crude closed out at 68.58, gaining $2.08 a barrel. 5-year Treasury is at 3.99. The 10 years at 4.43, and SOFR's at 4.31. U.S. debt, Disnet. Will, how many calories did we consume last week?
I'm looking at it here. Looks like we're up 22 billion.
Golly, that was a light week.
Yeah,
light caloric consumption.
Yeah,
right?
But we're not in a keto flu state yet because it looks like we only knocked off 9 from Doge.
Yep.
We skipped over SkiRE stock, so I'll just quickly hit that. No, it's good.
We don't have any stock. Well, we can just hit on Black Sky real quick. Things are ripping.
Yeah, it's not black out there for it for sure. It's all in the green. Real estate performed really well over the last week. Diversified's up 4.5%. Office is up 4.5%. Motel is a little bit behind at 3% up. Services is 232. Healthcare is at 231. Overall positive. The only thing that's down is REIT specialty. Everything else was plus 100 basis points or more. Mm-hmm. So, which is great. 1 month performance overall is really good too. So,
well, good job, real estate stocks.
Everybody keep making your fees. Keep pushing that volume.
Yeah.
To the moon.
Doge clock saved us $9.
Yeah.
9.3.
So it's a net 11.
Net 11. Term of the week. Surprised we haven't done this one yet.
Me too. I feel like there's a lot of this going on today.
A lot of Monday morning quarterbacking going on. Mm-hmm. Is that what's going on?
Yeah.
Heard that. Monday morning quarterback. That's a pretty good one.
Yeah, it's great. I love that.
There was an Instagram reel. Did I send it to you? I feel like
you might have, but
I might have.
I've since deleted Instagram off my phone.
Yeah, you'll be back. Oh, my Instagram feed is just all jujitsu videos and F1 videos.
I don't even want to go into what my reels are.
It's all Italian.
It's just some mess. I had a lot of ASMR, like rug cleaning, like building of structures over a long period of time.
I guess I didn't save it. It was pretty funny. It was a whole conversation rolling of corporate speak. It's pretty good. Liked it. Did you hate anything about real estate last week? I feel like I did.
What I hated was tenants who are not represented but think they know what they're doing in real estate and the nuances and complexities of what the market is and not doing. And actually what their real estate needs are. Yeah. So if you're a corporate tenant, and for me, corporate's like 200 million plus in revenue, go hire yourself representation.
So we won't go into too deep discussion about what you're exactly talking about.
Yeah.
But what I like to say happened there is private equity got private equity'd.
Yeah.
Like maybe you aren't the sharpest guy in the room or y'all really messed this up.
Yeah.
You know.
But it's really the lack of representation sometimes is like.
I have felt like our larger corporate tenants that do stuff like this, we should probably just go see them and be like, hey, I know we got you on this in a way, but like you should let us represent you going forward so that you don't get got.
Yeah, because we're dealing
like Marshawn said, you don't get got. You don't want to get got.
Marshawn Lynch.
Yeah, Marshawn Lynch.
Yeah,
he ain't gonna get got.
But dude, there's two that we're working right now.
Mm-hmm.
I mean, these dudes are huge. And they're like, a lot of it is just embarrassment and egg on face, right?
Totally.
Like
it's totally lack of planning in their real estate department. It's the failure of their real estate department to execute its job. Or if there is a real estate department, you know.
What's that saying? Failing to prepare is
if you fail to prepare to fail.
Yes, yeah, exactly. And like both of these situations,
yeah.
I mean, sucks. But it's not that I hated it. It was just like very frustrating.
Well, shock and awe phase.
Sure, yeah.
In news, S2 Capital has proved its resiliency in a market that drowned multifamily syndicators and has raised $343 million for its second value-add fund. So looks like they're going to go, the fund will target distressed assets that can upgrade, and 60% of the capital has already been invested in 14 properties across Texas, Arizona, Colorado, Florida, Tennessee, Georgia, and the Carolinas. They closed their first fund in September of 2022 at $400 million. It hasn't returned capital from this fund, but it landed a $500 million refi deal that provided distributions to limited partners. S2, I guess they did get foreclosed on, though, in that deal.
Oh, that's good.
S2 appeared to have defaulted on a $36 million loan provided by CBRE. The loan amounted in, it sounds like it, I don't know. It says news of success's S2 second fund comes after the firm faced foreclosure. It doesn't say if it got foreclosed on. It was supposed to happen like July 1st or something, right?
Yes, you're correct. Those things take a little bit.
Do they? I mean, if you have a date set.
But I feel like they can kind of kick it out.
Well, they can, but at some point they don't.
Yeah.
You know. So he launched a biggest private REIT to shield his syndicated deals. It's like I really wish I could understand that more. Do you understand that?
No. I probably my understanding is probably a little bit further than yours, only because I've heard probably more details from people who've worked closer to it.
Mm-hmm.
But in terms of my understanding of the complexity of it, no, it's probably less than yours. But
I just don't know what does that do? Like, how does that?
From my understanding, it was new money coming in to kind of bail out old money and a little bit of a gun to a head.
Yes.
But
so is that just recapitalizing your deal?
Kind of, yeah. It's like fresh new common equity coming in.
Fresh new pow.
Yeah. But again, I don't know, Scott. This is not us digging them or anything. We've got limited facts.
Yeah. Yeah, no, I'm just I'm just reading what's in the newspaper.
I do know from what I've heard though is that was not like people in those deals and or around those deals were not happy. But that's all.
Some LPs said they felt coerced into the conversion.
There you go. It's in writing on the internet.
And his portfolio still took a hit with the maneuver, coming out to 93 cents on the dollar. Plus, the firm still has to make good on the promise of its value add plan.
Rescue capital. Yeah, that's tough.
That's tough, man.
It's tough.
Like, I mean, shit, man, not everything works out.
Yeah.
This ain't up and to the right forever.
It's tough.
If it was and you're mad, then go do other things. Go buy the S&P.
Yeah.
I don't, I'm sure he found a way. I mean, he probably found a way to salvage it.
Yeah. Hey, 7 cents on the dollar is better than 50, right?
Yeah.
I mean, everybody wants 100% of the dollar coming back, but
right.
Jeremy and I don't know any details of anything, but like that sounds like if it was as bad as what the rumor mill was.
Well, it's better than most multifamily guys that lost all your equity.
Yeah, no, it sounds like this is a pretty good stopgap for now.
$343 million.
It's a lot of money, man.
It's a lot of money. So it's a lot of money considering what is perceived to have happened. And so they had to have dug into that and tell you how bad it really was.
Yeah.
So anyways, go buy them apartments, Scott. You're the man.
I'll tell you this, because they were in the same building as us when I was at Holt. They've got a machine up there. That's a really sophisticated group.
Yeah. No, there's no doubt. I mean, I know they've absolutely crushed it on the front. I mean, I think the thing is you only hear about bad news and it totally overwhelms the good news. Like his cumulative return for everybody probably fucking rocks.
Yeah, I'm sure. You didn't see him in the trenches from 2014, whenever he started doing stuff in 12.
Yeah,
him just murdering it from 15 through 2020.
Right.
Like
so. I mean, hell, Blackstone's walk deals.
Yeah.
Like,
yeah. I know people personally in our sphere who just were like, here are the keys.
Yeah.
Adios, sorry.
I got another story.
Okay.
FedEx to cut hundreds of jobs as it streamlines its U.S. operations. Move is part of a 30% planned reduction of its U.S. distribution hubs in the next 2 years. Logistics provider FedEx is ready to slash nearly 500 jobs and close 2 of the U.S. facilities as part of a massive consolidation of its business. The Memphis, Tennessee-based company with $87.7 billion in annual revenue discloses plans to cut 481 roles at distribution facilities in 4 U.S. states. The worker adjustment and retraining notification letter sent to various workforce and labor departments in Iowa, Nebraska, North Carolina, and Texas outline the plan to close facilities. Let's see. Blah, 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 blah. FedEx plans to close a package distribution center totaling nearly 600,000 feet along Old Oak Ridge Road in Greensboro, North Carolina, as well as close nearly 90,000 square foot facility in Omaha, Nebraska. The company also plans to cut 164 jobs tied to the Greensboro facility effective September 1. Likewise, FedEx also plans to eliminate 102 employees at the Omaha facility.
Jeez. Seems a little bit more localized.
The company also plans to eliminate 81 jobs at 3242 Herman Drive in Garland, Texas, and cut 50 jobs at 1200 Capitol Avenue in Plano, Texas. The Dallas area job cuts are expected to be effective September 1, and both North Texas facilities will remain operational, but at a reduced headcount. So, FedEx Network 2.0. They expect to save $1 billion as part of its consolidation during fiscal year 2026. The headwinds tied to the uncertain trade and tariff environment are difficult to predict, leaving FedEx executives from providing any full year guidance for 2026. So, like, when you see companies do this, maybe you buy their stock, right? Because they theoretically become more profitable.
Yeah, they should be becoming more leaner.
Yeah.
Or if they're expecting tariffs and stuff to impact them, maybe you wait longer. I mean, they're so freaking huge though, man.
$87 billion a year in revenue.
And I'm sure they've got AI in there and robotics moving stuff. Oh, you don't get sick, robot. Oh, you don't get pregnant, robot.
They're trading They're trading at $233 a share. Let's see. What's their 52-week high? Market cap is $56 billion. Doesn't have 52-week high in here. But it's down. It's been down significantly. Let's see, July last year. I mean, since September, it's dropped from like 310 to 233. It's just slowly kind of deteriorated.
Yeah.
But might be time to buy.
Get in.
What do you got?
Well, your friend Dory at Commerce Street's leading the charge on a new bank merger.
Oh, that's his gig, man.
Yeah. Veritex Holding, the parent company of Dallas Banks, Veritex Community Bank has agreed to a buyout by Huntington Bank shares in an all-stock deal valued at almost $2 billion.
And he's brokering it?
No, his firm is playing advisory on it.
Yeah. So
Evercore and Commerce Street are acting as financial advisors to Huntington while represent them as other people's. So
that dude does big deals.
Yeah, big deals only.
Big deals.
It's just
big Dory deals.
Yeah. BDD.
BDD.
The consolidation in the banking industry is wild. I mean, we saw Independent Bank get acquired earlier this year.
Yeah.
They're no longer here. Oh, they're here, but they're not locally owned. They're owned out of Florida. Yep. And then Huntington is out of Ohio. So your local banker has a boss sitting somewhere else now.
Yeah.
Just remember that.
Well, Veritex is publicly traded. Is Huntington publicly traded?
Yeah. Oh, yeah. They're huge. They got 200 and hold on. Veritex had $12.6 billion in AUM, and then Huntington has $209 billion in assets. Huge.
Do we own a bank one day? It sounds interesting.
It sounds interesting. I just don't know if that opportunity is there. Like there's so much consolidation. Yeah.
But you build one, build it up, sell it.
But I don't think they're giving out charters anymore is what I've heard. There's been no issuing of new charters since pre-Dodd-Frank.
Well, if you buy an existing bank, you don't have to have, you're buying their charter. Right?
Yeah. Yeah. You're getting their, yeah. But like, I'm sure guys like Dory it's like off-market deals for us. When there's some blood in the water, like everyone finds out really fast.
Yeah, totally.
So, yeah, we never borrowed from Veritex.
No, just got hosed by them.
Yeah, that was fun. That was a New Year's special.
We're still dealing with it.
Yeah.
We're still dealing with the aftermath. We appreciate it, guys.
Yeah,
they wouldn't pick up the phone. They wouldn't see me when I came to their office, you know.
And they walked a very large loan. They just straight up threw the keys to us, which is just wild.
Not their money.
No, yeah, they walked the collateral.
No, but it was an SBA loan. They walked the SBA's money.
I just wonder how much of it, because sometimes they do a hybrid. They're
probably, I mean,
probably very little,
like 85%.
Yeah,
SBA.
Yeah, yeah, exactly.
Well, what do we got? Anything else?
No,
week?
not really.
Get your offers in on the portfolio.
Yeah,
if you're close, we'll probably fly out and come see you. Sit down with you.
We will break it up. That's like the biggest thing people have asked. We'll break it up. Just offer on what you want. Offer on what you want. Yeah, if you just offer on two, you're going to be put to the bottom of the line.
Yeah, that's two. It needs to be a majority stake, or at least a whole market.
Or if you offer a 2 cap, I mean, we'd sell you 2 buildings at a 2 cap.
Yeah, we will. Sold.
Gone. But
so, all right. Well,
that's it.
No more sports to talk about. Oh, I want to talk about UFC this past week.
Okay.
Did you watch it?
I did not. I saw there was some boxing on Netflix, though.
Nobody cares about boxing. So Derek Lewis fought. He's my favorite fighter.
Okay.
Do you know who I'm talking about?
No, I don't. I don't really check
the Black Beast, Derek Lewis.
He said the big guy who's like, he was talking about Donald Trump, and he was just like, UFC, like USA in this hoe or something like that one time.
So they're interviewing him.
He's hilarious.
Oh, he's hilarious.
Did Rogan get out there?
No, it was a fight night, so Rogan wasn't there. But anyways, he was fighting this dude, monster dude. This guy's like 6'8", whatever. tons of reach. Man, he just comes out. And Derek Lewis, like, has the hardest hands, like, and he just knocks this dude out in 30 seconds.
Really?
Or his TKOs him. So they're interviewing him afterwards. And they're like, who do you want next? He goes, well, I've been gone for 2 weeks, so I want my wife next. He goes, it's gonna be ground and pound. She was standing right there.
Oh, that's outrageous.
It was man. Every one of his interviews are just they're just solid gold, man. He's out of Houston, man. He's awesome. I love it. He's my favorite fighter.
He actually, I did see a clip then on Facebook because I did see that because he was kind of struggling, and they were like, kill or be killed. Did you see like the commentary when he was sitting in the corner? Or maybe that was another fight. He knocked him out in the first 30 seconds?
Yeah. It was like that guy hit him and kind of poked him in the eye, and then he kind of went like, and then he just came up, bam,
okay,
hit him, and the guy's like, and
maybe it was like a compilation of stuff.
Yeah.
But his post interview, like, Donald Trump called me. He said, man, Russia's really giving me a hard time.
Yeah. That was probably a year and a half ago or something.
USA up in this hoe. It's just like
it was like the one where he took his shorts off.
Yes.
And Joe Rogan goes, why did you take your shorts off? He goes, my balls is hot. His Instagram page is pretty funny.
Is it?
He shows all these videos of people like getting hurt, and then his comment is, his comment is, he's okay.
Is AB still really heavy on Twitter? I've been off.
Twitter's it's kind of turned into crap lately. I don't even think there is retweet anymore.
It got dark there for me. Like the volume of like depressing stuff, like bad news was like,
I kind of got off after the Carmelo Anthony stuff, just everybody lighting each other up about racism and all this stuff. I was like,
yeah.
But I don't see like any true like retweet on there anymore. I feel like real estate has all moved to LinkedIn, and it's everybody who's a founder. Everybody's a founder on LinkedIn, founder and CEO. It's like, that's gay. And then it's like ChatGPT regurgitated some thoughts. I kind of want to get on there, and I've thrown some pretty good zingers at people, but they don't respond. It's weak sauce. Yeah,
well, they don't want to get out in them streets.
They don't want to.
They don't want to get them balls hot.
They don't want to get it. They don't want to get in that little word battle. But it's like, everything's great. So happy to be. Blah. I don't know. LinkedIn's pretty weak from that standpoint of mine. Yeah. It's so corporate, right? It's
super.
It's so polished. Where Twitter was where you could kind of get a little slutty.
Well, you also had a lot of people. You had anonymous accounts.
Yeah.
On Twitter, right? So
see, I don't. That's what I liked about LinkedIn is there are no anonymous accounts, but I think people need to speak their mind a little more on LinkedIn.
Yeah,
like they need to call out some people's BS on there.
Yeah, I don't disagree. Because like, you know what? If you're blowing smoke, the smoke is only gonna be able to not be blown for so long,
right?
So,
but that's all I got.
No, that's it.
All right. Good luck out there, real estaters.